Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with soon-to-be on Bob Iacino. How is everyone doing? Good afternoon, Davey. Wavy, what a rally. Yep, it was a massive junk and mega cap rally. You gave a couple things. Peloton, 14%, Art 9, Shop, 8.25s, Teledoc. You could go through the laundry list of unprofitable crap, and it was going on a tear today. Good afternoon, Patrick. Good. Hello, Dr. Michael. Good afternoon, Sashi. Sorry for delay. This is going to be a shorter live stream. The washer repairman showed up right like 5 minutes before the live stream. That's why the slight delay. Factory orders today came in stronger than expected. Let me just get through this before I bring on Bob. Tomorrow, remember, we got Fed Williams speaking right when the live stream starts tomorrow. And then we have the composite and services PMIs, and then 15 minutes after that, the non-manufacturing PMI. So it is going to be a busy day, and then FOMC in the afternoon, the minutes. So please keep that in mind. You can see the mega caps on here all up pretty big. And we already talked about the junk. Fed watch 83% of that 75 basis points and still a negative gamma, which you can get these kind of rallies. Look what I have up there. Oh, DoorDash. There's another one. Oh, look at that. 10.23%. Oh, I was going through a bunch of the crap rallies today. So, shopping while you're on your Peloton. Yeah, that's what it is. You should shop for stocks while you're on your Peloton too. Good afternoon, AP's World. Okay. Let me just, you know what to do if you're new. Please do subscribe. We're closing in on 5,000 subscribers. We're trying to make the push. Longer term subscribers, like the video and leave some comments after over. With that, let me bring on Bob. Coco. Well, I don't know where Bob is. Let's see. Why is Bob not on here? What happened to the
I'm here.
Bob
Can you hear
button?
me?
There we go. I had something happened with the Bob button. There's Bob. You're here. You're live. And I'm halfway
I'm here.
disappeared.
I'm happy to be here.
Well, I'm glad you're happy to be here. Well, crude got hammered today. Market
Yeah.
snapback rally. Crude got hammered. What's that, Mister Bubble?
This,
Yes,
yeah, Mr. Bubble Shirt.
you got a Mister Bubble shirt on.
Yeah,
Wow, that is
that's old
very
school.
that's very retro. Very
That's old
retro.
school.
So, what do you want? What do you think with what's going on in the markets now, Bob?
Well, I mean, today you can see from all the different sort of indicators that this was all basically yield driven, right? I mean, if you remember back when yields were falling, what was doing better? Crap companies that need to go to the markets to borrow money because they don't make any, right? So their borrowing just got a hell of a lot easier after the last few days. If you actually you go to the 10-year note, for example, well, let's go more toward sort of a corporate borrowing duration, which would probably be closer to the 5 year. 14th of June, pick that one, 361. Today, 282. So, I mean, when you have a difference of, what is that, 79 basis points in basically 2.5 weeks, that's a massive move lower. So that's why the junk tech was moving so much. It's also why um, I lost my train of thought. Oh, commodities were pushing so much lower. Obviously, the recession talk is digging in, which is why yields are falling as much as they are. The expectation of recessions, I should say. And dollar rallying while commodities fall, or I should say commodities fall while the dollar's rallying. A lot of people think the only reason for the dollar to rally is yields, or the only reason for the dollar to fall is yields. It is not. We had the euro hit about a 20-year low today, euro currency. So if the euro is going down, guess what's going up? The dollar. We had the British pound fall almost as much on a percentage basis as the euro did. Euro fell about 1.7 or so. Pound fell about 1.65. Pound was already weak, and you saw the pound falling, and then you heard that two of people from Boris Johnson's cabinet resigned. So the pound gets hit. Swiss franc, about 95 basis point lower. Canadian dollar falling along with crude oil, which is something we talked about on the podcast on Friday. We talked about turning negative on crude oil, and Jimmy Iorio had a long Canadian dollar trade, and I told him I liked the technical setup, but I didn't like because the correlation to crude oil. I thought crude oil had turned negative, not this negative, but I did think I had turned negative on crude oil. If I thought it was this negative, I would have been short crude oil. I was not. So the dollar strengthens against the Canadian dollar, the British pound, the Swiss franc, the Japanese yen, and the euro currency. So that's all about the other currencies falling, and U.S. yields is weaker economy, falling yields, flattening into inverting yield curve. Here's another thing we should look at. If you just go back to, I don't know, pick a month, Mike. Pick any month. How about February of this year?
In what?
I'm just saying, pick a month of the last year or so. I don't care which one.
All right. We'll just go with February then.
All right, we'll go February. The month of February ended with the 2s-10s spread positive 39 basis points. Today, it actually briefly went negative. Finished the day flat, but not when you take it out a few decimal places, actually. When you go out a few decimal places, the 2-year, the 2s-10 is actually slightly inverted when you go out to a third decimal. But if you round, it's actually flat. It finished at 0.0. So let's go even further back. Actually, let's just go to its recent highs. How about that? 2s-10 spread. We go back to, I don't know, January 4th was 89 basis points positive. It went negative May 1st by 6 basis points. And then the high from there was positive about 39 basis points. And that happened on 40. That happened on May 6th. No, that's 44, my bad. 44 on May 9th was the recent high. Those are positives. Now we're back to negative on it. So the market is starting to price in a recession, and they're starting to price in a short one, which I think is interesting. Because when you go on a wider version of the yield curve, like 2s 30s and 5s 30s, it's actually steepening a little bit. So they're starting to price in a short recession in the yields. That's helping the crap tech stocks, not necessarily the bigger tech stocks as much. But the tech stocks that don't make money will rally as yields fall, when they fall dramatically and when they fall quickly. So anyway, that's my take on all this. Crude oil, we had Citibank predict $65 and possibly $45. We had Goldman predict $320. JP Morgan, I'm sorry. JP Morgan's analyst is saying we can get to over, I think it was 280. I don't think it was 320. But JP Morgan says over $200. Citigroup says 65, possibly 45. So those analysts, man.
They're
Good
all
stuff.
over the place. Well, if it triggered that
Copper
double top, it could go down, to 60, 61, 62.
Which double top is that?
The double
there
top
it is.
in crude.
Yeah. We talked about that on the podcast too, I think.
Yep. By the way, the double bottom, that's off the table. It never triggered.
It's gone. Yeah.
It's gone. So.
And it's gone.
Let's see. Oh, here's an Waka Waka. Every time, day before FOMC minutes, we rally, and on the day of FOMC, we tank the day after. Every time.
Okay, Waka Waka, I'm going to go look at every FOMC day now, right? Every single one, and I'm going to find probably 20 that doesn't happen. Be careful about using every time, because you're going to start to trade it if you convince yourself that it happens every time.
So,
just for the record, it doesn't. But anyway,
see, you have such smart people in here, because Uh, Wavy asked before you got thoughts on the dollar rally, and Sterling asked, was it rally driven by the yield? See, we don't
Yeah.
even.
Well, no, they weren't even listening. How come you guys don't listen?
No, those were before.
I guess I want. Oh, they were before. So I answered it, right? You guys all heard that or no?
Yes, I was going back in time because that's what they asked you, as you know, and then you start talking about it just naturally. So we don't
Yeah.
even need you anymore, Bob.
No, you just need me to record something.
Yeah. What Copper also? I mean, Copper just got slammed.
Hey, when you get a chance, pull up the Swiss trade. It got nowhere near my stop. I have a Swiss long off of a trigger double bottom, but it got nowhere near my stop today.
You have a Swiss.
And by the way, Swiss is also a flight to what chart is that?
That's the U.S. dollar Swiss. You want the futures?
Oh yeah, I'm sorry. Do you mind looking at the futures?
No.
It'd be 6S.
Yeah, hold on. I should have it in.
There it is. So nowhere near the stop. And by the way, if part of this is flight to safety, like flight to the dollar, the Swiss and the yen should actually hold up better, which so far they have, versus like the pound, the euro, the Canadian dollar. I didn't look at the Aussie or the Kiwi today. They probably got hit as well, but I didn't look.
So what else do you want me to glance at while we're on here?
That for me is pretty much it. How did Jimmy's Canadian dollar trade work out? I don't think it worked out well at all.
He was on this. Oh, I don't have it on here.
That's all right. He was on the buy side of the Canadian dollar.
So, Let's see
But
what
you
else.
told him in the podcast that he was jumping the gun on a double. So
Bob, any
that's what
thoughts about the FOMC tomorrow? The minutes.
I suspect it'll be more aggressive than the yields are showing. I suspect the discussion will be about staying the course on rates, and that could potentially hurt the market a little bit. I don't know because it really depends on yields. The whole day today was yields driven, in my opinion. I could be wrong about that, but that's my opinion. So it's likely because it was an old meeting from a couple of weeks ago. They're going to be pretty staunch in their support of taming inflation, regardless of what happens. So now some of the Fed speak will be very interesting now that yields are falling as to what they say. They've priced out the 75 basis point hike, if I'm not wrong on that, on the CME Fed Watch tool. I think they've priced that out now. And they've put the dominant narrative on 50. Am I right or wrong?
It's still 83.2 on the 75.
Okay. I'm surprised. Maybe the next one is where they priced it out.
The next.
Either way, they'll basically be talking about in these FOMC minutes. They'll be very aggressive in terms of taming inflation and getting that sort of bear back in the can. I don't think that's a saying, but I'm going to use that from now on. You got to put the bear back in the can.
Yeah, the next one is the September is still favoring a 50, and July is still favoring the 75.
Mike, you want to see a picture of a bear in my neighborhood?
There's a bear in your neighborhood?
Well, there was the other day. I just texted it to you.
In Naples, Florida, there's a bear?
Yeah, I just texted two of them, two pictures. And one of them is a live photo, so you'll be able to touch it and watch the big old thing walking.
Oh, there. I didn't think you had bears.
That's a big boy.
That is a.
Oh,
I
yeah,
would not want
bear.
to get in front of him.
That is a market signal, as Waka Waka is saying right now, that the bear is out.
So is that something we don't want to mess with?
My niece said there's a saying: black fight back, brown lay down, white you're going to see the light. That's your code for how to deal with bears.
Okay. So that's going to be that was the if a bear's in your neighborhood, it means the bear market is not over.
We'll give you all kinds of information here.
So when we see a bull running down the street in Naples, Florida, then we can shift back to being
Then we could
long-term
turn the
bullish.
market back. Yeah. Then we
Okay,
could
so
turn
that's
long-term bullish again.
and bear better than beer likes bears. Who would have ever guessed that bear better than beer likes bears?
Is beer better than beer from Chicago?
I have no idea. So that's where we sit. Let's. I'm trying to think. Is there anything else you want to cover?
No, not, that was everything to me. The yields were the big story.
All right.
FOMC tomorrow. Non-farm payrolls is probably going to be a little light, but we can talk about that on Thursday.
Yeah, we have. It's a busy for the rest of the week. It is busy with
Yeah, it really is for a shortened week.
we have because don't forget even after tomorrow. You have any thoughts on whether these will contract more, the PMIs and ISM non-manufacturing?
So those are S&Ps. The S&P are they're smaller companies that they survey, which is really interesting. So I suspect they'll be weaker than the other corresponding PMIs from ISM. The Institute of Supply Managers surveys much larger companies. S&P surveys more like smaller S&P and larger Russell style companies. So it should, it will likely be weaker because I suspect that smaller companies are weaker. The company that makes the nonstick surfaces for like, what are the pans with the nonstick surfaces or surfaces on them? Calphalon. This particular company was bought by a Japanese conglomerate, and the CEO of the nonstick company, I think it's called 3M Nonstick, he was on an interview today that I was watching, and he said that, and he would fall into this sort of large, small company that S&P would survey. Um, they were bought by a $9 billion Japanese conglomerate, but they're not $1 billion company. They're hundreds of millions. And he said that surprisingly, they're weaker now than they thought they would be. And actually, their sales are weaker than he's ever seen since he's been CEO. So I suspect that'll translate into these PMI numbers. That's my guess. I wish I could remember his name. I can't remember his name right now, but maybe I can find the interview.
Yeah, and just remember, everyone, after tomorrow, we still have again Thursday. We got continuous jobless claims and more Fed speak, but then Friday we have non-farm payrolls.
Mm.
So it's non-farm
Waka
payroll.
Waka's right about Jolts, Mike. Jolts is going to be, I don't know if it's going to move the market, but it's going to be really interesting. Jolts will be interesting tomorrow.
Yep, that's tomorrow. That's at
If we
9
start to
a.m.
see the
Central.
Jolts number shrinking in this environment, it's likely bad news, not good news.
Sport Life, welcome to the live stream. Euro US dollar a buy. I don't have a signal.
We don't, yeah, we don't generally buy just collapsing markets, sports life, just because they're collapsing. Um, this is the lowest level for the euro in since 2003, but there
Yep.
are lower levels than this. Okay, so it can go lower than this. And actually, I think it was Goldman Sachs today put out a target of 98 for the euro US dollar. So we need a buy signal to buy. We don't buy just because they've collapsed. If we did that, then we would have been buying like in 2019, and we weren't. So
So yeah, this broke. I talked about this morning, and it was breaking, and we did close below critical support. And you still a clear path move. You pretty much have a clear path move back to parity on a monthly basis.
yeah,
So what I mean, we hit. Look at the harmonic right there. But you hit a harmonic, but it's not a buy signal. There's no way I'd stand in front of this without a buy signal.
yeah, it's a target for a short, not a buy
Yep.
signal.
Yeah, this is not me. You don't just go, oh, look, you hit a target. I'm going to go long because obviously it's oversold.
Right, right.
So, uh,
Anything else for me, guys? And Mike, I'll let you get to what you got to do before you finish it.
yep. You Waka, you're so positive.
I love Waka. Waka's the best.
Waka makes me look bullish.
Hey, at least walk up with most instead of always in this last comment.
You notice most major market events start in Asia or Euro first, then hit the U.S. market. And cocoa,
Uh,
crude oil
the
will go to
crash in
65 by
2008.
the end of the year.
First of all, the 2008 crisis started here, didn't start in Asia or Europe. And then in terms of crude oil hitting 65, that's what Citi is predicting. I honestly don't see that happening. I would be surprised at $70. But of course, it can happen. It certainly can happen. I still think that the supply, um, the consumer is still active. I don't think they're strong, but they're still active. One of the things consumers have to do is heat their homes in terms of heating oil, which comes from crude oil. And that's going to be coming up in a couple of months. And the summer driving season is not over yet. And as these prices collapse a little bit, gasoline and airline tickets will get a little bit more affordable. And Gavin Newsom just passed recession relief. So that money's probably going to go back into the economy, and a lot of it's going to go into buying crude oil and cars. And I don't see permanent demand destruction here. I just see temporary demand destruction from the shock of those sort of 125, 130 levels and that $5, $6 gasoline. But when that eases off, people will actually feel like $384 feels like a relief. So I don't personally see it, but it certainly can happen. Where's that 200, Mike? Can't see it.
The 200 is right at about 92.50.
Yeah. Watch, I'd say watch around there. Watch around the 200. And then Mike's got some levels there as well that are well above 65 that have to be broken. So could happen, but I'm not predicting it.
And we still have risked the upside if we do get a Gulf hurricane or something.
Right. There's no hurricanes priced in. We've got our first officially named storm right now. I forget what it's called, mainly because it's not important to me because of the trajectory. Um, it just popped up. Like I got an alert for it. We've got our first named storm, and it's already over um, past Mexico, and it's in the path of like California. Let's see. It's called Bonnie, Hurricane Bonnie. So it's already basically south of Los Angeles, but that's our first named storm of the year.
Isn't it the second
And
name storm?
there
Because
was
we already had an A.
well, there was a tropical storm. It didn't end up turning into it. They named it, and then they actually said that if it turned into a hurricane, they would rename it. They named it and pulled it back. But this is our first named hurricanes, Category 1. And I'm looking at the thing now. There's really nothing developing. There's no depressions or anything right now. So there's nothing priced in. But the second something gets priced in, you're talking about $15 added to crude oil just like that. But
Again, I'm not saying it was good, but it's something to keep an eye on because we're still very early. I mean, the hurricane season runs for a couple more months.
goes to October.
Yeah.
October 1st is the theoretical end of it. So we got
So
time.
there's still upside risk, but again, you got to trade the patterns. So,
Yeah.
all right. Well, let's. I just got to
Guys,
look through a couple
going.
things real quick. Thank you, Bob.
Yep. I'll talk to you guys later.
All right, bye. All right, small mic here. Let's just go through a couple things real quick because I got to cut this one short. I know Sterling posted this on the Twitter feed today, but this is the play of the day, the S&P double bottom. And then I wanted to point something else out. The next target that I was using besides the harmonic, which you got the pausing bar right there in this clear path, was the breakdown zone. Remember to always watch the breakdown zone and pretty much where you ended the spike high day. Any hedge funds guy? I did not hear of anything. It looked like, also, by the way, this price action in a lot of the crap stocks looked very coordinated with a major fund purchasing through a automated program. So there was a lot of very high correlation all going off at once. It looked like a very programmatic buy in the crap today. And remember, in these rallies, I've talked about this before. I've talked about this a couple weeks ago. When you do get the rallies, look to crap first and mega caps. And that's exactly what we got the rallies in. So Let's see. The S&P for tomorrow or overnight. I'm watching this little prior topping area and the 50%. So can't really get bullish again, as I said this morning, until we get above 38.50. Then 38.70 area would be the next target. Now on a pullback overnight, I'm watching this little prior ledge here with the 37.5 about 38.21. And then below that, I am watching, if we do get a bigger pullback, about 38.10, and then I go back to 3,800. Those are my key pullback levels I am watching right there. Uh, but we're still against the daily rotation zone, and that 62.5 is major. If we get a close above that 62.5, then I will be targeting the most recent swing highs with cycles on the daily turning up. NASDAQ, again, got the monster rally here. Just wanted to show you something here. We got some momentum bars. We got some pretty decent momentum off these lows with that double bottom, and then you got the pullback between the 50 and the 62.5 with no close below the 62.5, and then it continued to push higher. So this was the next little great momentum setup. Since we didn't have a double in there, that was the next little great off that 50 to 62.5. And by the way, on the sell-off before you got your first reaction, you see here that was a 62.5, so it spiked in there, reversed lower, and then caught on the direction of the harmonics the other way. So that's how you can use the harmonics with those upside momentums to time a continuation trade. Then just kept marching higher. For tomorrow, we pretty much closed at the 50%. I'm then targeting 11,922, and then the breakdown zone right around 12.19 to 12.26 on a pullback. My first major pullback area is about 11,700. And if we did drop below that, it's 11,618 if something really big happened. Dow, again, there was a nice little pullback with the reaction and then marching higher. The Dow area, again, slamming into the daily rotation zone. What am I keying off of tomorrow? Can't really get super bullish until we get above 31,200. Minor bullish above about 31.75. Crude, we got that pullback that invalidated that potential double top, remember? And also remember, we've touched on this from before when we got that close back on the 23rd below the 62.5. Nice little rebound rally and then rollover play, but still not hitting that 87.5. So on a push lower, I'm still watching about 96 to about 96.60 for a little bit more downside. Don't have a strong bottoming pattern on this yet. This is just a little end of day reaction bump up. So there's no potential buy signal in there. Notes. Again, I just have to deal with the washing machine, so that's why I'm going through a little quicker. Notes, still watching at over the next little bit for a potential pullback, even if we do push higher. Right up against here, my next target's 120.19 before I'm watching for a pullback and then another rotation move higher. Dollar index, by the way, I changed the levels. I had old levels on from before, and I updated it to the swing low of the 30th to the pausing bar high of June 15th. And that gave me this 106.10 area and then this 106.63 area. And then we have 107.10, the next key level. That is the next level higher. So that's why you're seeing slightly different levels. The VIX, again, this potential double on the daily basis is still there, so I'll watch for there. But if we start breaking down below about 26.75 tomorrow, then I'm playing for the continued rally in the short term. So that's where we stand. That's where we sit. ARC. I wish they would fix this. ARC, you got, again, massive move in this, 9%. You still have this potential double. You still have a potential double bottom down there. But it's running up. This is a pretty major key area. So unless this double triggers, there is nothing to the upside until we break and trigger that double. So what else? Oh, we'll just peek at Tesla. By the way, Tesla, this was enough to, this was technically formed a double bottom that was triggered right here on the 1 hour basis. So the next target's high, and it filled that gap magnet. Next target's higher on a continued rally, 707, 74, 716, 27, 724, 19. And where does that take us? Well, the rotation zone's flat, but that's just sitting up against the weekly rotation zone. So we could have some little more upside in this before the next roll over play, and that's true across all the markets. With that, and it could be, but this, you could still get another couple days of rally left in this easily. But Waka Waka sees it going red tomorrow, so we shall see. I'll be back on tomorrow at 8 a.m. Sorry to cut it a little shorter, but that's just the way it sometimes is. At least we still got a live stream in. Hope everyone has a fantastic night, and we'll refine the levels and figure out if it's the bullish or bearish play going after tomorrow morning's live stream. Bye for